Now, today money's flowing into stocks. If we take a look where else it is flowing, it is more so flowing out of precious metals. Now, yesterday stocks moved down and we saw precious metals rocket higher. We saw gold move up. Gold hasn't quite broken out of this pattern, is threatening and testing that again today. But we saw money move into precious metals. Silver was up almost 5% again yesterday, having another big pop. With our band strategy, we ended up hitting our 15% target from our recent entry. When we look at it on the daily chart, definitely is starting to look a little oversold. The S&P 500 is down to the blue line, which is the 50-day moving average. It's settling into a really a do or die level here. It needs to find support around this price zone, which is kind of through all of this noise for it to start to stabilize and start to move higher. Now, if we look at it from a 30-minute chart, you can see we've dipped into oversold territory, which is this lime green. We did have a little bit of panic selling the other day where it dipped down into this level, but yesterday we just continued to see more selling take place and more unwinding. And it was interesting because the VIX didn't spike yesterday. Even though the markets were down fairly sharply, we didn't see really any fear. It was really just technology driven. If we take a look at XLK had a big sell-off. We can see it on the daily chart over here. Really expanded to the downside. And of course, XLK has been under pressure for a while, continuing to sell off. A good chunk of that has to do, obviously, with the Magnificent Seven. If we take a look at the mags, big down day for them. We saw Nvidia does not look good when we take a look at the Nvidia chart. Let's just...
The recent weakness is concentrated where strength once dominated: technology. The sector that carried markets higher is now doing the opposite. Large-cap leaders that once felt untouchable are testing major support levels. Crowded trades unwind quickly when sentiment shifts, and stocks that rise the fastest often fall the hardest. Investors who piled into the same winners now face the risk of synchronized exits. This rotation doesn't require bad news, only fading momentum. History shows that when leadership fractures, broader market stability becomes far more difficult to maintain.
Nvidia testing a really critical support level through here. It used to be the darling, and now it is about to be one of, probably was the most loved somewhere over in this region, and is probably going to be one of the most hated in 2026 if the markets unfold like I think they're going to unfold, where everyone piled into Nvidia and the Magnificent Seven. And when everybody piles in, they all go higher. When they all move out at the same time, they collapse. And it can drop a lot faster than when it even went up. So we're very close to the cusp of a big sell-off. And if the Magnificent Seven all start to break down, it is not going to be good. If we look at the S&P 500, the Microsoft, we had two big gaps up on news, both rejected, massive double top. It looks like it's broken down and it is in a downtrend as well. Apple shares have been under pressure a little bit. Obviously, they've been hitting all-time highs. It actually still has a strong-looking chart. This one is kind of bucking the trend. It has pulled back, but in a very controlled way. If we take a look at Google, Google's been doing fairly well also, similar to Apple. It had a little bit more of a drop there yesterday, but again, still a series of bull flags. These little drops and shakeouts where they kind of hook down are a lot of times kind of an exhaustion move, which is what I feel like yesterday kind of was. Not only for Google, but for I think for the market as a whole. You can see here we had a drop down. Over here we had a pullback, and it has a red bar and a drop down. A lot of times you get these drops just before the market starts another rally. It's just kind of the way of people giving up, and then suddenly the market bottoms right after people give up and sell those positions.
Not all mega caps are breaking down at once. Some continue to show resilience, consolidating rather than collapsing. These controlled pullbacks can sometimes mark temporary exhaustion before another rally attempt. However, others are forming topping patterns, rejecting previous highs, and slipping into downtrends. This divergence creates confusion and volatility, shaking out weaker hands. Markets often bottom when frustration peaks, and investors give up on positions near support. Whether this recent sell-off represents capitulation or just another pause remains unresolved, but the internal stress is clearly growing.
If we take a look at Amazon, we've got Amazon kind of bouncing, trading sideways, doesn't look all that well. Meta was down pretty good yesterday, I think. Again, so much volatility in these stocks. A big moving day, percentage-wise, doesn't even look like much on these charts. And Tesla down about 5% yesterday after having a really nice rally the previous few sessions, having a bit of a reversal, some profit taking, and some price pullback there. Now, today money's flowing into stocks. If we take a look where else it is flowing, it is more so flowing out of precious metals. Now, yesterday stocks moved down and we saw precious metals rocket higher. We saw gold move up. Gold hasn't quite broken out of this pattern, is threatening and testing that again today. But we saw money move into precious metals. Silver was up almost 5% again yesterday, having another big pop. With our band strategy, we ended up hitting our 15% target from our recent entry on the SLV silver trade. And again, this still looks like it wants to go higher. Platinum and palladium both continuing to move higher. They're screaming higher as well. If we look at platinum futures, if we look at palladium futures here, up almost 2% today. And then of course, if we take a look over at miners, GDX, again, this whole space, gold and gold miners are struggling a little bit more than everything else. They just haven't really popped. The faster moving things, it seems like silver miners, platinum, palladium have gotten a lot of the attention. And the gold space has been kind of just in the back seat a little bit, but I do think we're going to see it continue to move higher. I really like gold, and miners I think they could struggle a little bit simply because if the stock market does go down, gold miners and silver miners are stocks, and they're stuck in a market that naturally has selling pressure. So it could be a little bit muted. That's why I like the physical metals better.
As equities wobbled, money didn't disappear. It moved. Precious metals surged as investors sought protection. Silver led the move, posting sharp gains and outperforming gold, while platinum and palladium joined the rally. These metals often respond when financial assets lose momentum. Gold itself remains technically constructive, even if miners lag due to their stock market exposure. Physical metals tend to shine when confidence erodes. This rotation highlights a recurring pattern. When paper assets stumble, tangible assets begin to attract renewed attention.
If we take a look at crude oil hit a critical support level over the past couple trading sessions. It had a bounce today. It's trying to work itself back up and have a little bit of a bounce again. It gapped higher. It's selling down a little bit. Overall, oil does not look all that good. I think we'll be in the 40s probably within a few weeks, depending on how this unfolds. But the market always has a way of taking its time. It may want to bounce and flounder and keep bouncing along this line for a while before it breaks down. But it definitely looks like it wants to break down. The other move here, if we take a look at Bitcoin, again, we've talked about Bitcoin for a while. We talked about it in this broadening formation right here, where we said, hey, we got this broadening formation. It's just a terrible pattern to trade. It keeps making fake new highs and then reverses, and then it keeps making lower lows, but each time it makes a lower low, it has a strong bounce. We want to steer clear of that type of pattern. And of course, it is broken down, and it is in this kind of phase, I think, right here, somewhere in here. Either way, it doesn't look good, and it has the potential to break down and unwind down towards that $70,000 or $65,000 level. If the stock market wants to continue to sell off, we could really see this pick up speed. It does not look like a very good play at this point. Taking a look at utilities, they have definitely had a big correction. They've pulled back. They're sitting on the 150-day moving average. They're kind of sitting right through this kind of support level, this high volume level through here, this previous high. It's trying to figure out what it's going to do. You'd think these would come to life and move up with gold. That's what we saw during this last run, but utilities just don't seem to be getting traction right now, and they're not really moving up. So I'm not sure this is trying to find a bottom, but the short-term trend is down, and this could continue to unwind even further. So I'm not a fan of this chart pattern. It really needed to find traction over here and keep going up, not break down. And again, it's really struggling.
Elsewhere, warning signs are flashing. Crude oil has struggled to hold key support levels, suggesting weakening demand expectations. While short-term bounces are possible, the broader trend points lower. Digital assets show similar instability. Bitcoin remains trapped in an erratic pattern, producing false breakouts and sharp reversals. These formations often signal distribution rather than accumulation. If equity markets continue to weaken, speculative assets may feel amplified pressure. When liquidity tightens, riskier trades are usually the first to unwind.
Taking a look at the banking space, we got the regional banks, U.S. regional banks. They're holding up near these highs. They seem to be performing fairly well and holding their value. They actually have a pretty high momentum move, showing that we could probably see a push up towards 69, maybe 70 over the next couple of sessions. That will be pushing deeper into resistance right up here. So if it does get up there in your long regional banks, I'd definitely be looking to pull some money off the table, lock in some profits, move your stops up. If we take a look at a couple of Canadian banks, we got Royal Bank of Canada. It has been on fire, moving up as well, pays some nice dividends. Let's just zoom back on the chart and get a bigger picture here. So Royal Bank has been just on fire and moving higher. Again, it has a similar short-term chart pattern as the regional banks, where it's just a series of rallies and pauses. It's forming what looks to be another little bit of a bull flag, and this still might want to continue to push higher. If we look at Bank of Montreal, looks like a little bit more of a double top kind of pattern. Has a top here. It's been definitely rejected very quickly here. It is still kind of channeling and trending higher. So it has probably pulled back into a support zone. We'll see if it gets some traction, but overall, I'm not as big of a fan of this chart pattern. I'm not a fan of, it seems like we've had many kind of bit of double top patterns form in this, and then it kind of sells off. We got a top and it sells off. And so I'm not a fan of the Bank of Montreal. I know some of you wanted me to cover some Canadian banks, so I'm just quickly jumping through a couple of these.
Defensive areas are offering mixed signals. Utilities, often seen as safe havens, have failed to attract consistent buying despite broader uncertainty. Their inability to gain traction raises questions about investor confidence. Meanwhile, regional and international banks are holding up better than expected, grinding higher but nearing resistance. Strong momentum can persist until it doesn't. At elevated levels, risk management becomes critical. Across the board, markets appear to be transitioning. Whether this is a pause before another rally or the early phase of a deeper correction may soon be decided.